In this presentation, we will discuss the Comprehensive Annual Financial Report, otherwise known as the CAFR. CAFRs, or the Comprehensive Annual Financial Reports, are prepared by most larger governments, so they may not be required under governmental accounting. However, most larger governments will go through the full Comprehensive Annual Financial Reports. The CAFRs are a government's official annual reports. They're prepared and published for public record. The CAFR includes minimum requirements of general purpose external financial reports. So these are going to be the minimum requirements. And you'll recall again, the CAFR is going to go above and beyond the minimum requirements. But those minimum requirements are management's discussion and analysis, the MD&A, basic government-wide and fund financial statements and related notes, required supplementary information, also known as RSI. These are the minimum requirements. The Comprehensive Annual Financial Reports, the CAFRs, will go above and beyond the minimum requirements, also including the individual fund and combining financial statements, schedules, narrative explanations, statistical section, other material management deems relevant, so other items that is deemed relevant by management, and if the CAFR contains audited financial statements, the auditor's report should also be included. So if the government entity had a financial audit, external auditor, then of course the audit report included as well. CAFR sections, this is going to be a common type of test question within governmental accounting. So you want to know the three sections for the CAFR, which is the introductory section, the financial section, and the statistical section. The introductory section, because it is often not covered by the auditor's report, it can be more subjective in nature, possibly including forecasts and expectations. In other words, when we think about the auditor's report, it's not something that's going to be including the introductory section. The auditor's report giving an opinion on the financial statements then means that those financial statements have to be in accordance with whatever the requirements are of the audit in order for the opinion to be given. The introductory section is going to be outside of the auditor's report, providing the ability to be more subjective in nature. So you can give things like opinions. So we can have forecasts into the future. Obviously, when we consider forecasts into the future, there's going to be more projections into that. We're going to be thinking about what could happen as opposed to reporting on what has happened in more concrete type terms. We're projecting out into the future. Introductory section includes the table of contents, letter of transmittal, other material deemed appropriate by management. These are basically like the minimum type of requirements for the introductory section. The financial section, this is going to be the minimum content for the financial section, including the auditor's report, the MD&A, that's the management's discussion and analysis, often called the MD&A, the basic financial statements, government-wide financial statements, the fund financial statements, notes to the financial statements, required supplementary information other than the MD&A, including the budgetary comparison schedule and combining statements of individual fund statements and schedules. The statistical section, typically having 5 categories, should present the most recent 10 years of data for each. 5 categories including financial trends information, revenue capacity information, debt capacity information, demographic and economic information, and operating information. Financial trends information shows how government's financial position has changed over time, focuses on showing the trend in fund balances and net position, and prepared at fund level as well as at the government-wide level. Fund financial statements, so we're thinking about the fund side of things. When we think about the financial statements, we often think about the two sides. We got the government-wide type financial statements on the government-wide level, then breaking that information into the funds. So the fund financial statements prepared for all governmental funds and proprietary funds. So when we think about the types of funds, the category of funds, we have the governmental funds, largest groups of funds, those being on the modified accrual basis. Proprietary funds, those are going to be those types of funds that are going to be similar to for-profit in some ways, and therefore we use an accrual basis in those types of funds. Notice what's not included here, those being the fiduciary funds, where there's some kind of fiduciary responsibility, typically funds in which the governmental unit is accounting for assets or tracking assets or doing something with regards to assets that don't belong to the government or the citizens of the government, but belong to someone else, and they're in essence acting as an agent for them. So the fiduciary funds then we don't see here, aren't included. We have the balance sheet, the governmental funds. So when we think about the balance sheet on the governmental funds, we have the balance sheet for the governmental funds, that being the largest groups of funds. Statement of revenue, expenditures, and changes in fund balance for the governmental funds. Note, when we think about the governmental funds, the statement of revenues, expenditures, and changes in fund balance is, of course, similar to the income statement, the timing type statement. We can tell from it that we're talking about an accrual basis item here, or accrual basis funds, the governmental funds being accrual basis because of the term expenditures as opposed to expenses. Fund balances are classified according to constraints on use. So the constraints on use: non-spendable, restricted, committed, assigned, and unassigned. So when we think about the fund balance, assets minus liabilities gives us that fund balance. We then have the categorizations of those fund balances as either non-spendable, restricted, committed, assigned, and unassigned. And if we think about those, you'll recall that if we think about how people are going to want to spend money, they're going to look at the fund balance, which represents the assets minus the liabilities, and then try to think about what can they do with that money, because it represents assets minus liabilities. We got to then say, okay, these type of fund balance, this portion of the fund balance is going to have different types of restrictions related to it, which will give some determination of what the planning can be for the future with regards for it. And that includes the non-spendable, restricted, committed, assigned, and unassigned being those types of categories of restriction. The general fund is the only fund that can have a positive unassigned fund balance. So the only fund that can have a positive unassigned fund balance is the general fund, the main governmental fund, the one which every type of governmental entity that uses fund accounting will have at least one of, the general fund, and only one of. Then we have the reconciliation process. We have to have a reconciliation process between the government-wide type of activities, the governmental actions column, and the fund financial statement. So we want to think about these being reported in two different ways again. We got the government-wide level of things, and then we've got the fund level of things. We want to reconcile the two. Why don't they reconcile? Well, mainly because the governmental type of activities are on an accrual basis, and the funds, particularly the governmental funds, are on a modified accrual type of basis, and therefore we got the differences that are going to be a result of the fact that we're using two different types of accounting bases, and we want to be able to take these two things which should reflect the same type of information and be able to reconcile what those differences are. And if we can reconcile exactly what those differences are, basically just listing out exactly what the differences are going from one balance to the other and saying this is why the changes are there, it's due to these different types of accounting basis, accrual and modified accrual, then we can have confidence that double check in essence that the information is recorded properly, everything is included within the two formats. So things that could be different between the two are things like disposition of capital assets, outlays of capital outlays and depreciation. These are items that are going to be different because on the accrual basis, obviously, we're going to record the capital assets as an asset on the balance sheet. And on the modified accrual basis, we don't have long-term assets like capital assets, property, plant, and equipment, or capital assets. And we record them instead as a flow type of activity. And so we're going to have that difference then in terms of the timing difference of when things are going to happen. On the under normal accrual government-wide activity, we're going to record it as we would expect when we have an asset. We put it on the books, then we depreciate it. Modified accrual basis for the governmental funds, we're going to record it not as an asset on the books, but possibly record it as an expenditure at the point in time that we have the capital assets rather than depreciating it. So we'll have to account for that. That'll be one of the reconciling differences. We could have differences for the retirement of debt, inter-fund transfer, accrued expenses, insurance of long-term debt. So anything related to long-term debt is going to be another thing that could be a difference because, of course, once again, on the accrual basis, we would expect long-term debt, such as a bond payable, to be on the books as a liability. We have a bonds payable on the books as a liability. But when we go to the modified accrual for the governmental funds, we're not going to be recording long-term liabilities and maybe put in the flow in the activities in more of a temporary type of account. as we record that under a modified accrual basis. And then again, we're going to have that difference that we'll have to reconcile for within the reconciliation process to tie these two things together.